by these financial services?
Thank you very much. That's a good question. And I like what do we mean by financial services.
Okay.
Oftentimes when you talk about financial services, people think accessing commercial banking services. When we talk of financial services, access to a bank account, for example, where you can save your money or deposit your funds. We're also looking at access to investments through the capital markets. We're looking at access to insurance, and also to payment services, being able to make payments as one of the financial services that we consider when you talk our financial services.
Okay.
So when you ask what can be done to improve financial services, we need to get back and say what are the challenges in accessing financial services. I think that's a good starting point. Bank of Uganda sits in, we come from a point of view of implementing the financial inclusion strategy.
Okay.
That started from 2017 and ends at 2022, to be specific, in September 2022. So what are these barriers, if I may say, that the population finds in accessing financial services? One of them is issues around proximity.
Okay.
You know, you want to access a commercial bank branch, but you find that you need to travel 5 kilometers or even 10 to get a bank branch. You want to access, but you're not aware of the benefits of insurance. That comes into issues around. On the side of the providers, you want to provide, for example, to the population, but the law does not allow you. You want to give credit, but you don't know about the customer because there is no information about the customer, and you know the ID, if given to ID as a provider, I'm not able to tell whether it's your right ID or not. Okay. So all those are issues that impact on accessing financial services. What would say then, what is the Bank of Uganda doing? And many other stakeholders, and I mentioned the issue of the National Financial Inclusion 5 objectives or pillars. One of them is reducing access barriers, trying to make sure that the inconvenience of the consumer in accessing financial services. And one of the things that came out clearly in 2017 was the agent banking. Cross-board, you see commercial bank agents all over the place. So that was one of the initiatives. The regulation came on board in 2017 after amending the Financial Institutions Act. So that is on the regulatory front. But also there are other things that now we have about 27,000 agents compared to around 900 bank branches, including ATMs. So that tells you the scale of the law and how it has. Bank of Uganda is looking at amending the current microfinance deposit taking institutions act to allow for microfinance deposit taking institutions, because they normally serve the bottom of the pyramid, the smaller savers and those who expect that if that is done, we will have more outreach, especially in the rural areas. Okay. Currently, we are seeing agent banking mainly in town. Another initiative that was done within there are quite a number, so I'll mention a few just to save time. Okay. There are quite a number. One of them is allowing financial institutions to access the NIRA database for purposes of KYC, similar to what the mobile network operators do. When you take your national ID, they're able to validate that you are the right person, either using your thumbprint. Right now, financial institutions, especially those that are regulated by Bank of Uganda, are able to use your details and verify that you're actually the right person with those details that you provided on the national ID. Okay. Yeah.
Now, when you look at this, the total access to financial services is at 52%. I will stand to be corrected if at all it's not. But is there any plan of increasing this number?
Absolutely, yes. We need to think of where we're coming from. If I go back almost more than 15 years ago, let me say 2006, when we did the first survey, the demand side survey is called FinScope survey, that looks at the population that is accessing financial services, but what are the challenges to access to financial services. At that time, it was only 20%, 26%, 28% of the population that had access to a financial service. And remember, I defined it at the beginning. Either you have a mobile money account for payment purposes, you have a bank account, or insurance or capital markets. You're investing in capital markets. So you, in that case, you financially included, and formally, for that matter. Formally meaning you access financial services from an institution that is either regulated or a little bit organized. There's some bit of protection, including access to having a SACCO account. We were at 28% about 2006. By 2009, access had increased to about 46%. And fast forward 2013, we moved to about 54%. And in 2018, when we did the last survey, we were at 58%. That is for more access. Of course, overall access was about 78%. There are some financial services which are informally provided, you know. So you may have someone who is banking or with a VSLA, is accessing financial services within the group because they're able to save and later borrow from that same group. The person has access, but it's not formal. If the person keeping the money runs away, there's no recourse mechanism for such a person. So that increased to about 58, which I mentioned as formal, and 78 for overall financial inclusion.
Okay.
Yeah.
And speaking of which, what measures do you have to improve on the gender balance regarding financial services in the country to see that both females and males are moving on the same pace?
Interestingly, in Uganda, there is, I could say there's hardly, when you think of overall, there's hardly any gender balance, in that, in the gender imbalance, for that matter. In the last FinScope we did, I think 77 and 78% had access to financial services. So it was about 1 percentage point difference between male and female. That is in overall. Now that tells you the structure. I'll explain. But when you look at formal, the difference was about 13 percentage points, meaning men had more access compared to women to formal financial services. Now the question then comes, why are women included but more informally? We need to think of the structure of the population. Most women, and for the sake of mentioning, they're mainly rural-based. And I think that is total gender. You know, the population is mainly rural-based. But if you look at more ladies, they access informal financial services. VSLA is a good vehicle for accessing or for financial inclusion, mainly for ladies. The groups are mainly female-based. So they have access, but informally. Now, what are we doing to reduce the gender gap? And the good news we have is that more recently, when the World Bank released its Findex survey findings, it found that actually gender gap had reduced from the 13 percentage points I mentioned to only 2 percentage points, which is good news. And what drove it? Access to mobile money accounts by women. And what is the Bank of Uganda doing? One of the things we are doing within the strategy to ensure that women continue to consume or to use the financial services that meets their need. You know, you cannot take a commercial bank where people do not want it. Because they prefer to use VSLA. They find it more convenient for them. It's near, and they're used to their members. So what we are trying to do, how do we protect these women or the groups? We're trying to link them to the formal financial sector. You mobilize your funding, but make sure this funding is placed in a safer environment, which is a commercial bank or a regulated financial institution for purposes of consumer protection. If you get any problem, at least your funds are safe than having it kept in one person's place and probably fire could come and burn all the resources, or someone could claim that the funds were stolen, and therefore you would not have any recourse mechanism. So the banks are getting products that can meet the needs of the women or the VSLAs through linking them and having, especially we've seen a number of commercial banks actually do that. But
where do you believe this comes in, this gender imbalance? Was it created by society, or is it because of the issue about the economy itself?
It's a couple of factors. You know, when we did a study, one of them was saying one of the reasons that the population gives is that we don't have enough income to be able to have an account. You know,
Okay.
we don't see the need to have an account given the income that we have as one of the factors. So they would prefer to use other vehicles for saving. If you have little money and yet you have to put it, then go back and pick it, some people find it more tiresome to do that or cumbersome. So they use other vehicles for accessing financial services within their vicinity that meets their need. Right. Now the gender balance comes in terms of some of them was lack of having the relevant identification, and especially the national ID. Right. Currently the law allows only for most services that you use the national ID. If you remember, the NERA Act provides for that. But we are seeing the population now accessing national ID, and therefore in terms of KYC, they should be able to open an account. But financial institutions should be able to provide products that meet the needs of the consumers. Okay. That's the most important part of it. Okay. I wouldn't open a bank account if it doesn't meet my need. I wouldn't buy insurance if I don't know the importance of insurance, for example.
Okay, let's now look at the issue of digitalization. As economies are trying to transition to the e-commerce space, how best can we utilize it as well?
I'll talk from perspective of the financial sector.
Okay.
We've seen growth in digital access over the past 4 or 5 years, but more so during COVID. If you remember, when there was lockdown, you only had to purely use the internet to access most of the services because we couldn't travel. With the exception of a few sectors like the media and maybe financial services that could move to be able to support the population. So we saw increment in digital access by the population, and that was a good thing I could say that COVID brought to us. For the financial sector, we also saw a lot of adoption of digital financial services. Okay. Mobile money, as I speak now, which was one of the vehicles around that time, we have about 38 million accounts. Okay. Now that could mean you might have 2 accounts anyway, so that there could be double counting in that. But also, if you look at the active accounts, meaning the accounts that are used for transaction on a regular basis, it's about 22 million. And our adult population is about 21 million, with a population 16 years and above. The estimate of about 21 million of the 46 million in total. So you could think that digital access, for that matter, has actually improved financial inclusion to a large extent, and that also came out in the World Bank study that says that digital access and more importantly payment services improved financial inclusion in Uganda. We think that going forward, especially with the work being done by the Ministry of ICT in expanding services to the rural areas, we should be on the right track. It's something we cannot run away from now. Okay.
And now let's look at the parish development model, which is one of the government projects that is being pushed to eradicate poverty. Now, is financial inclusion ready to walk along with it?
Actually, we are walking along, not just being ready. Okay. I see the PDM, the parish development model, it's actually a very good vehicle for financial inclusion. Okay. And when you talk to the ministry, financial inclusion is not in itself an end for PDM. It's just a means to the achievement of the goal of PDM, which is increased household income and improvement in welfare. With the 7 pillars, financial inclusion is just one of the pillars, which is the 3rd one. And thinking about opening up a circle or a cooperative in each parish, and there are about 10,594 parishes in Uganda, where government will provide a revolving fund within the circles. What that means then is that in terms of access, for me, from a financial inclusion point of view, we will be able to have one access point in each and every parish. You get it? Okay. So look at the opportunity that we have for expanding financial services to the rural areas. You know, so each parish will have a circle. Now, if we implement the PDM very well, I think we will achieve almost 100% financial inclusion. by end of the period for the implementation of the PDM.
Okay.
These funds will come, but you need to supplement the funding that the population will get with other things like financial literacy, which is very important.
Okay.
Of course, the population sometimes they look at government programs as they have just given us resources to spend, and therefore they don't use it well. But what is important, under the PDM, they also have a pillar which is mindset change. Can we change the mindset of the population? If you got this money, know that the next person also needs to utilize the money back. When you borrow, you need to pay back, and that is important. So by integrating mindset change as well as financial literacy within the PDM, I think that's a good thing.
You've mentioned something about financial literacy. What is your move towards ensuring that the entire Ugandans get to understand the financial bit of Uganda today?
What actually we do at the central bank is that we implement another strategy. We coordinate, let me use the word coordinate because it's a multi-stakeholder strategy. It's a national strategy, therefore I cannot claim it as a Bank of Uganda strategy.
Okay.
We coordinate the strategy for financial literacy. We had the first one between 2013 to 2017. We developed the second one for 2019 to 2024. And the strategy looks at a couple of areas, priority sectors, the women, the youth, rural workplaces like here, and the other special interest groups like the parish the forcibly displaced persons and people with disabilities, as well as digital financial literacy as one of the special areas that are in the strategy. Now, what do we do in this strategy? We have a couple of stakeholders that do different implementation. For example, the National Social Security Fund, NSSF, is a key stakeholder in implementing the strategy. More important, in workplaces, they provide training or they build the capacity of those who save with them to enhance their financial literacy and ability to manage their money, more so realizing that most people, after picking their saving from NSSF, they either use it in a way that cannot sustain them over a longer period of time after retirement. So they have done a very good and a commendable job in that area. Now, for the Bank of Uganda, what we do, we have a program called Financial Literacy Training of Trainers Program, where we've trained in excess of 2,000 trainers. So we invite those who are very interested in scaling financial literacy, and we take them through a 5-day program on the basics of financial services, products and services, but also we take them through training skills. Okay. So they impart that knowledge on the population. We also go out a lot on radio stations and TV, but mostly because of the nature of Uganda, people mostly listen to radio. So we go a lot on radios in rural areas or outside of Kampala.
All right. And for the viewers out there, we're still discussing more of the financial services, discussing finances generally on our topic of discussion this morning. And after the break, we're going to look more into what was launched yesterday, that is the findings of the Financial Capability Survey, which was launched by the Bank of Uganda yesterday, still on a broader perspective of financial inclusion in Uganda. What needs to be done and what are the challenges in there? Those are more discussions and conversations that we're going to be having after the break. Stick around. Good morning.